Hey, well, welcome everyone. This is our continuing podcast series, and we're very fortunate to have Raoul Paul on today. Welcome, Raoul.
It's
And
always great to be. It's always great to be here. Always look
yeah,
forward to
thanks
this.
for taking time away from the inauguration, which is going or is finished, I guess. Yeah, lots of interesting things out of that. But we don't like talking politics, certainly not in mixed crowds like this. We'd rather talk more finance and crypto, everything crypto today, and especially about your not so new fund, but we've been monitoring it for some time. And I think what I'll try to do just before we get into everything, let me see if I can share the last presentation of yours, just the rates of return that exist in this crypto space. I think most people wouldn't appreciate that Bitcoin has been around since 2011. I think it had its birthday the other day. I had it in my calendar. It's averaging 140% annualized return. That means every year, 140%. Like that's more than compounding. There must be another word for it. We'll get your answer later as to what Solana is, 217% per year since 2021. And then you compare that to, say, most people's portfolios of US large caps that have only done 13% per year since the same time frame as Bitcoin of 2011. So, you're getting a tenfold increase in this crypto space. And I just thought I'd start there. So let's stop sharing and turn this into more of a discussion. And yeah, so just maybe introduce yourself for those who don't know, Raul, and then we'll get into this.
Sure. So my name is Raoul Pal. I am based in the Cayman Islands, actually, but English, obviously, as you can tell. My background is 35 years of macro investing. So macro investing is looking at all asset classes, how they interplay with the global economies, and figuring out how to allocate assets. I was at Goldman Sachs, advising hedge funds, the world's most famous hedge funds, from Paul Tudor Jones to Stan Druckenmiller to George Soros, all of those guys. Then I went to run a big global macro hedge fund for GLG Partners, which was the biggest hedge fund firm in Europe. Then eventually opted out of the rat race and moved to the Mediterranean coast of Spain, where I started writing macroeconomic research and investment strategy, a global macro investor. That service I've been writing for 20 years now and is the best performing research service of all time, which is quite a privilege, and I feel very blessed to have done that. I also co-founded Real Vision, which is a financial knowledge platform, which is really about democratizing access to information as the world has become more about self-directed investments and less around gatekeepers. We've pioneered that movement. Within that, I've been a pioneer in the crypto industry, being an investor. First, when Bitcoin was $200 back in 2013, I wrote the first ever macro strategy piece on how to value Bitcoin back in 2013, and been involved ever since. With Real Vision, we've taken many people down that journey, millions of people down the journey of discovering this incredibly powerful new asset. And then back in 2021, we launched Exponential Age Asset Management, which is an asset management firm. Our core product is a fund of hedge funds that just solely invest in crypto markets. So their job, because it's a very complicated world out there, and there's thousands and tens of thousands of different tokens, and it looks very confusing for everybody, including myself. We don't have the time. It's okay. We can all hold a bit of Bitcoin, a bit of Ethereum, whatever. There's ETFs for that. But really, it's capturing what's this massive adoption of the technology in the space. And so I found that the best answer for my own capital was to give it to a bunch of hedge funds whose job is 24 hours a day to monitor my capital and find the opportunities. So we built a portfolio of 12 to 14 of the world's best managers that we find ourselves because of my network of knowing so many people, and then allocate capital accordingly, and then use our business cycle macro framework to understand where we are in the cycle and what kind of managers we should be allocating to. And the idea, but if Real Vision was all about the average person getting access, this is for people access to knowledge. This is to give people access to the investment opportunity. To make it easy for people to set it, forget it, and capture the trend. Today, the crypto market is a $3 trillion asset class. If we continue to extrapolate out the trend rates of growth, we get to $100 trillion in 10 years. So there's a 30x from here to come out of the space, and it won't just accrue to Bitcoin. it will accrue to a lot of things which will have huge performance. And really, it's the vehicle, Exponential Age Asset Management, and the fund, EDAF, Exponential Age Digital Asset Fund, that its job really is to capture that. Just so people cannot have to worry about trading and worry about how do I store my tokens or anything else. They're like, okay, I see this technology, I want to capture it, and it's a simple vehicle to do that.
Okay, great. Good introduction. And sorry, my internet might be a little spotty, so I'm glad that my colleague Joe Poshadiniak's here as well. So Joe, feel free to jump in should I go dormant. Let's start off with the question, why? Why did you start this? You answered it a bit there, but maybe just break it down a little bit more.
Yeah, because many people came to me and said, look, Raoul, I know what you're saying, that this is the big opportunity, the greatest maybe investment opportunity of all time. Bitcoin has already been the greatest performing asset in all recorded history, and this is just going to continue. But they're like, I don't really know how to do it. I don't feel like it's just a Bitcoin world. You know, there's all of these tokens. I understand the finance industry is going to build on it. I understand the social media industry, the music industry, the sports industry. Everyone's going to start using this technology. And in a world of AI, we need digital ID and proof of humanhood and all of this stuff. And blockchain technology is that. It's just a technology. It's a database that's really clever, as opposed to a database in a bank with a ledger that says, I buy, you sell. And maybe you'll have a third party, like an auditor, to say, I agree that that happened. Right? You've got a point of trust failure. In blockchain technology, what you do is millions of computers or thousands of computers confirm that this transaction is correct. So you have what's known as digital proof. And that can apply to anything. It's not just Bitcoin or money. There's so many things. In fact, everything we do is a contract. And literally every single thing. Me turning up today is a contract. You know, it was via email. It's not a value exchange, but it's a house, it's a value exchange. Car, it's a value exchange. Tickets to a concert, value exchange. All of this can go on crypto, and it's instantly settlable, very fast, anywhere in the world. It's high velocity of capital. So an amazing thing. So people say, okay, I get that, Raoul, but this is way too complicated. There's all of this technology. I don't understand technology. It's not my job, but I want to capture this trend. And it was a lot of family offices and high net worth individuals came to us and said, Raoul, what can I do? So I actually wrote an article about it. Say, listen, I've got the same problem. It's getting too complicated. I think the answer is a fund of funds. I'm investing in crypto hedge funds. And interesting enough, there was a wave of people wrote back from global macro investors saying, yes, please. And then a friend of mine who I've known for a long time said, and I will help you manage it. And that's John Pridgeon, who's my co-founder, who was ex-Soros, a lawyer, an accountant, and 30 years of the hedge fund industry, said this is such a good idea, we just have to do it. So I had no excuses. So we did it, and it solves a big problem for people. It allows people to kind of set it and forget it, not look at the screen prices all day, which is very distracting with an asset that's so volatile. What you want is just to sleep at night. You understand there's a lot of volatility, but just with a long enough time horizon, you capture the kinds of returns that we've seen from Bitcoin over the years.
Yeah, so that's a fund to fund. We're very familiar with our fund to fund, which is over 14 years old now, investing in alternative assets. Joe Poshadiniak runs that and spends 100% of his time on it. I remember one of the first questions we got when we launched from the skeptics was, a fund to fund, doesn't that mean fees on fees? And isn't the only person going to make it is just the fund managers? And how are the investors ever going to get anything there? So how do you answer that one for your fund to fund?
Pretty simple. Last year, we did about 60% return. The year before, we did about 109%. The fees don't matter in a world of crypto. If you've got a credit fund that does 7% returns, and then you have a fund of 10 of those, yeah, it can be quite hard for anybody to make money. But when you've got an asset class that has this kind of return, fees are irrelevant. And what you're getting for the fees is access to managers of which you'd never have access to. You know, we've seeded new managers. We found amazing people who have come out of Goldman Sachs and helped them launch. And we kind of custody their assets, take the execution risk of investing in their business. So we've got the assets ourselves, but we can help encourage it. So what you're getting is the best group of people in the world to manage your money for you while you sleep. And the returns in crypto are so large that the net versus gross argument doesn't really matter. We also, because we find many new managers and we help them in their journey, we get discounted fees, and that helps as well.
Good. Good. Well, I see you've got over a million followers on X, and you've used that platform quite effectively to locate these people, because some of them are probably just quiet and keep to themselves and want to do their own thing.
That's right. I mean, I've used X to say, because I've got a big following in the crypto space, say, listen, if you've got a hedge fund and you're trying to raise assets, let us know. And we've probably spoken to 200 or 300 hedge funds and done due diligence on maybe 100, and then fine due diligence on maybe 50, of which we choose 14. So, but what we get to see is people that you'd never hear about, that, and they may be, we've got groups in Asia, we've got groups in London, we've got groups in Holland, we've got groups in the US, Canada, all over the place. So we find these pockets of unbelievable talent and then work very carefully with them to make sure that the operational due diligence is correct, what they're doing is correct, all of that stuff before we make an investment. So it's a big process, but we think we've got some of the best managers in the world that are possible to find.
And can some of these managers, can they sort out the inefficiencies in the market, just like you would in any publicly traded market? Like, talk about the inefficiencies that might exist.
Yeah, so the inefficiency, there's two levels of inefficiency here. Just at the top level, the hedge fund industry outside of crypto, the traditional alternatives, is a $4 trillion industry. So it's big. The crypto hedge fund industry is maybe 10 to $15 billion. It's minuscule. While the VC industry is very big in crypto, well, very big, bigger. It's like 60, $70 billion. So what happens is often when products come to market with their tokens, because there's so much VC and not enough secondary, prices fall quite a lot. And that means that the hedge funds get a really good opportunity. So they find lots of opportunities in inefficiency of capital markets. The other thing is we also employ a strategy, a macro top-down strategy, where we use our everything code framework to understand how the world works and when the liquidity cycle drives crypto. And there's always 1 year out of 4 you want to try and not be in crypto, or you want a different managed exposure because you don't not want to be in it because you might miss a rally or whatever. What you want is managed exposure. And there we use market neutral managers. So we switch out of the more directional and we start to concentrate in market neutral managers. Now, in market neutral, what we're seeing is there's a lot of arbitrage in the markets. It's very inefficient. So you can arbitrage between exchanges, or you can arbitrage between lending markets, and you can arbitrage between futures and cash markets. There's so many ways of doing arbitrage, and the returns are very, very large. So a normal kind of arbitrage style fund using leverage in traditional markets, might make 10 to 15%. 15% would be quite racy. In crypto, it's not unusual for a market neutral using no leverage to make 35% returns. So, in a bear market, that's going to be very helpful to dampen the volatility of the market itself. But yes, overall, it's a small market. It's very inefficient, much like the macro markets were back in the 80s and 90s, or the emerging markets in the 90s, or the China opportunities in the early 2000s. It's that kind of thing. It's very early, and those people who are experts can make a lot of money.
Joe, why don't you jump in here for a sec?
Yeah, sure, David. Raoul, I guess, not to talk politics, but the fact of the matter is he's now acting President Trump now, so we can say that. I just want to talk a little bit about, or ask you about what your thoughts are on David Sachs and Paul Atkins coming into that crypto czar role and potentially the head of the SEC role. Some of the stuff that comes out suggests that those two appointments are unanimously bullish for crypto. Would that be your view? And then with Trump, I noticed that Solana really took off on these, I guess, Donald Trump meme coins. Is that sort of like a pump that you would, not to make a call on Solana in the short term, certainly, but I have to pick your brains on those two things.
Yeah. So if you look at the sources of capital for the Trump campaign, the largest single source of capital was crypto. They swung more states than any other group. It was huge. Of which, of the like 60 odd states, 60 odd battlegrounds that they were involved in, I think they swung 90% of them. So who is that? That is Coinbase. That is XRP Ripple. That is Andreessen Horowitz. I mean, these are the most powerful, richest entities in crypto. And in exchange for winning Donald Trump the election, Donald Trump has gone all in on crypto. So much so that he's launching his own memes. Now, we can argue all day whether that was a good or bad thing to do, but what it's telling you is business is open. They're going to change how capital formation works in the United States. And we're going to be used tokens as a way of creating fast, big capital formation. It's a very big deal. It's a very big deal because the finance industry has now got the nod to go ahead, to build on top of these rails. We've got whether it's social media, whether it's all of the other aspects of the economy are now free to do this. Now, we haven't got the clear regulation, but for Donald Trump to launch a meme coin 2 days before the inauguration tells you how lenient this administration is going to be. Yeah. It's basically going to be an explosion of innovation. There will be grifting as well, because when you get a lightly regulated market that generates huge amounts of money, you'll get both innovation and speculation and bad actors. So, again, that's another reason why Exponential Age Digital Asset Fund works, because you're trying to filter out the complexities of this. Look, it tells me that we are going to see a lot that is very, very positive crypto in this space. I mean, essentially, it was a coup on the White House by the technologists. They took it over at every angle, from Elon to David Sachs to even Vivek to, I mean, literally every single member is a technologist.
Yeah, I'm really glad you brought up Coinbase. And as I understand it, I mean, I'm not, I just sort of read the stuff everyone else does. It seems as though Sachs is actually going to have an office in the White House. So, he's going to be potentially just down the hall from the president's office. And, on Coinbase, I was watching a little bit of the inauguration, but like Brian Armstrong, I think, was there, and all of these supporters were there. It was like an inauguration, but it almost could have passed for like a crypto or a tech conference. So
that's exactly right. I mean, Elon was there, Zuckerberg was there, Bezos was there, the head of Google was there, and then they had the crypto inauguration ball the other night, and that's Scott Bessent, who I know is the new Treasury Secretary. He's a Global Macro Investor subscriber, or used to be, was there hanging out with Brian Armstrong, with Michael Saylor, you name it. This is a extraordinary shift. I have never seen any. Well, the last political shift I saw of this magnitude was probably the Margaret Thatcher Ronald Reagan shift in 1980.
Yeah, and the real news is as I would agree with you, those swing states that you kind of look at your models or whatever, and you wouldn't have expected that. Maybe some would, but
well, Joe, I mean, the important thing to understand, and this is very important, is young people today cannot afford to buy a house. They can't afford to build the deposit because debasement of currency has meant that asset prices have gone up, but wages haven't. So you've got Gen Z and millennials knowing that their future is screwed. And they realize that with the returns that Dave showed earlier, crypto is the only answer. So you've got this massive cohort of like 120 million people under the age of 38 who want to invest in crypto.
Yeah.
And the Democrat Party was saying, we don't want you to. So what the Democrats were doing was saying, we want to curtail your future. We don't want you to have the opportunity set. Now, that's why it didn't work. I mean, it's very hard to tell people, here's a big opportunity, but you can't have it. Only us can have it. It's like, that's not right. And I think that's why so many swing states fell, because in the end, all the young voters We saw it, record numbers of young people flipping to Republican, which they were never before. Even young females under the age of 30 were flipping Republican, unheard of. And it's because of this. It's because, in the end, people vote with their pocketbook and they vote with the opportunity set. And this crypto is the big opportunity set of all time. It's the biggest one.
Yeah, that's a really interesting point, and a really good one. One final question from myself before I pass it back to Ken and Dave is like, is it because sometimes a lot of these stories are more, kind of Latin America or Brazil in nature, and the way I understand it is Brazil is looking to essentially institute controls over their supply chain through the blockchain. Is this the United States really trying to get a better grasp of their own supply chain, or is it not really that?
We don't know yet. But if you have better regulation, because there will be regulation, but better regulation, the number of innovative use cases you could use for blockchain is vast. I mean, like one of the investors actually in EDAF is one of the heads of commodity trading for Louis Dreyfus, the soft commodities firm in Switzerland. And she said, I asked her, I said, why don't you guys use blockchain? She goes, oh no, all of the soft commodity trading houses have been using blockchain since like 2018. I'm like, doing what? She said, if you think about it, we're moving physical goods around the world, in this case, cocoa, let's say. We have a certificate that says this is quality cocoa that's come from this particular farm. And there's a bill of shipping. There is a letter of credit. There's all of these contracts that when you're dealing with African countries, etc., you're moving it around. It's complex. So she said, we all decided to settle and do everything on blockchain. So all of these guys move around soft commodities around the world using blockchain for instantaneous settlement and proof of product. I mean, it's coming.
There's that whole like ESG compliance is like you get gold or cocoa from somewhere. I think from a coffee perspective, Brazil is still the world's leader. But let's talk about gold for a second, right? I think a lot of investors might not appreciate their gold coming from part of the world where maybe human rights are not so strong, environmental rules are not so strong. They might appreciate hearing that their gold came from a place like Canada as an example, and so the blockchain can do that very, very easily.
Yeah It's same with wine, where you've got big issue with authenticity, and wine over time gets more and more valuable if it's high quality wine. And there's a lot of fraud because high quality goods end up with fraud, expensive goods. So I've been involved in a project which is tokenizing fine wines. So it's art, fine wine, all of these things of value where it can move around and it gets lost for periods of time because it's in storage somewhere. Well, blockchain helps with all of that. Or high velocity goods like money, or commodities like cocoa or coffee, that too. I mean, there's an enormous amount of use cases. The other big one is we're not going to know online who is a AI and who is a person. So we need to prove who we are. And blockchain does that really well.
Yeah, I'll jump in now that we're getting into the weeds, because this hopefully the people listening will want us to get more into the weeds. One subject that's bothered me for a long period of time is in the stock trading business for small and microcap stocks, naked short selling. Naked short selling, most investors haven't a clue what that means, but I'll just capsulize it, where infinite number of shares can be sold without borrowing. And so by putting a blockchain on every share ownership so that the CEO knows exactly who owns the stock. And when they come out with a debt offering, it's not going to go and crash their stock. That's just going to be marvelous. That venture capital exchange in Canada is perhaps the worst performing venture or exchange in the world over the last 10 years. It's just turned positive, I believe, but it's been showing negative returns over the last 10 years because of this phenomenon that the regulators don't really seem to be that concerned about. Well, now the CEOs aren't just going to be drawing a paycheck. They're actually going to have to be implementing some of these things. So maybe talk a little bit about what you might know in that side of things.
For people to really understand it, cast your minds back to 2008. 2008, Lehman goes bust. Big giant bank. And everyone thinks, well, I'll just get a claim because I got Lehman debt or whatever. And so I'll just get the assets against it. And suddenly they find, oh no, all of those assets were lent out like 32 times. So I get 1/32 of what I'm thinking I'm going to get. Right? This is the rehypothecation of collateral. It's everywhere. It happens in the housing market, happens everywhere. And in the end, you don't know who owns what. Blockchain changes that entirely. You don't pool it all. You see exactly who owns what collateral and when. It would even stop a run on the banking system because you can, in real time, see the value of the collateral, who owns it, how secure it is, things like that. So I think you're right, Dave. Even the excess shorting of shares in excess of the underlying, there's so many things that happen in finance that are exploited because it's inefficient and it's not right. And it's not the professionals who get hit by it, it's the retail investor. The other thing is how much capital is locked in the system from just not settling trades. You know, T+2, T+3, all of this. Hundreds of billions of dollars slosh around every day, and the banks actually earn interest on it, but we don't get it, right? And with blockchain settlement, it'll go to instantaneous. You know, anybody who's bought anything on the blockchain knows it settles in seconds. And so that gets rid of all of that. The other one of where it really makes a difference is, like, I get my hair cut by a Filipino guy in the Cayman Islands. He's a big crypto fanatic. I'm like, why are you a crypto fanatic? He's like, oh, because I send money home to my family in crypto, in stable coins. I said, why do you do that? He goes, well, Western Union, it would cost me about 30%. And in this, it costs me nothing. And I can be on the phone to my mum and say, did you get it? She goes, yep, there it is. He said, that's an extraordinary thing. And people forget that. You know, we take it for granted, but, you know, you try making like a friend of mine, I'd been on a rally, and this is a slightly adjunct story, but interesting. I'd been on an expedition in Zambia, driving off-road and camping in the middle of nowhere. We got home from the Cayman Islands. A friend of mine stayed on to drive to Zimbabwe afterwards with his dad. We got a message to say, we're in trouble. We've been bitten by tsetse flies and have sleeping sickness, and there's no medicine. We might die. It's like, okay, great. This is a Friday night in the Cayman Islands, and we have to send instant money to South Africa to charter a plane and to get him into the hospital. Problem is, can't send money.
Mm.
South Africa's got pretty much a closed economy when it comes to capital controls. The banking system from the Cayman Islands is a bit slow. To send it by South Africa, it would have taken 4 days, and they would have died. And the answer was, find somebody in South Africa who'll take crypto and send them an instant payment, 1 second, and you can sort it out. It's so game-changing. People don't really understand it because it all gets wrapped up in just being Bitcoin, but it's so much bigger than that. It's basically the infrastructure layer to the internet to move value around and record value.
It's funny. That's a really interesting story, and especially it would turned out to be true too, because you always find a lot of scams can go on there too that people get picked off on. We've got a new thing in our real estate fund. It's just a small income property in the Bahamas, and trying to get money to the two caretakers there, it's impossible. I guess the Bahamas is shut down because of money laundering and that, so getting money in and out. Do you have a coin or something that works very well, keeping U.S.
No,
dollar?
it's actually a problem because I live in the Cayman Islands, which is a tax-free jurisdiction. It's like the premium tax-free jurisdiction. We report everything to every government. You know, it's very above board. It's very difficult to take crypto out, which is another reason why a fund works a lot better, because I can't take my crypto out because the banks won't allow me to accept crypto funds. And it's not because they don't like crypto. It's they don't know how to do KYC and AML on crypto money. Otherwise, they would just, let's say I'd redeemed from one of your funds, I bring the money back. They would say, well, what is this? You would send a note saying, yes, here's who invested in our fund, and this is where the source of funds came from. You can't do it with crypto. So they won't take it. So, and that's the problem they're having in the Bahamas as well, is you can't send them crypto because they can't take it out unless you can pay in crypto for something else. The US is easier, but still it has not been easy. Canada's been relatively okay, but not brilliant. It's always been difficult, and so it does change. But this is also one of the reasons why the fund of fund works, because if you do make a lot of money in crypto and your investment goes up, 10x over 5 years, and you try and bring that money back, and your bank goes, if it was in Bitcoin, your bank's like, well, where did this come from? Crypto, well, we won't accept it. But if it's from a fund that's KYC and AML, then you can bring it back in easily. So it's another advantage of the fund.
That's really good to know. But going back to your friend in Zimbabwe and Zambia, how did they turn it into currency to pay for all the things they needed?
But because the guy we sent it to likes crypto, because South African currency is generally weak, so he keeps crypto. So he just had money in his bank account, so he managed to just front the money to the hospital to pay the upfront bills. If not, we couldn't do it. But South Africa's relatively open to crypto. It's a very vibrant place for crypto, so you can get it out from the banking system, etc. So it's one of the least restricted countries when it comes to that, bringing money into the country.
Well, just maybe quickly on money laundering, because Toronto Dominion Bank late last year got sort of the mother of all fines for money laundering. The European Banking Authority put out a report a couple of days ago saying that vulnerabilities still exist, particularly as it pertains to the blockchain and cryptocurrencies being used for money laundering. How do you feel about that? I mean, is it more than it was a couple of years ago? Is it less? Are the controls better? Because the reason why I ask is there's some people, it's a shrinking pool of people, but there's some people that still are concerned about this issue.
From what I know from experts who analyze the space, we think it's less than 0.1%. Now, is there bad money that moves around? Russian money, whatever it may be, Iran's money? Of course. Same with US dollars cash, same with euros, same with all of these things. Same in art, wine, physical metals, really huge. Send copper from one place to another is a nice way of getting around all sorts of things. So it is one of the smaller ones because it's recorded, while inventories of copper and false invoicing and all of the other ways of doing it are miles long.
And to the people that take this is sort of a front for money laundering. It's like, well, talk to any credit card CEO about credit card fraud, and you could put like 3 extra zeros behind that number.
That's right. And also, in the end, blockchain is open. Everyone can see it. Everyone can see every transaction. Now, we already know that the FBI, using AI technologies and other pattern matching stuff, can figure out the flow of capital in blockchain. So it's not a secrecy platform. It's an efficiency platform. The secrecy element, of I can move money around because I'm a gun runner, it's just not really possible without it being spotted. US dollar cash, impossible to spot.
Yeah. You've obviously educated yourself by just working in the space. What, for people new to it and our clients and other investors, where can they go to become educated? Is there any book that you recommend? Anything like that?
No, because it's moving so fast that every book is out of date. There is, you can start with a book called, no, I wouldn't go with books. They're all out of date. There are some good quality podcasts. I mean, I try and do one. So via Real Vision, I have a whole host of podcasts. Things like, I did an interview with Stephen Bartlett, who's the second largest podcast in the world, a Diary of a CEO, where he did a really good job of asking me the basic questions. So that's a great place. So if you look at Raoul Pal, Diary of a CEO, it's either on my YouTube channel or on Real Vision itself. And then I think on Real Vision itself, of which many of your clients are aware of, it's a trusted source of information. And it's a broad source. It's not just me telling you, it's all sorts of experts. And I think that's a great place to start. And it's free to join, realvision.com/join. And it will help you in this journey of understanding that. But that Stephen Bartlett podcast is probably ground zero for most people.
Okay. Well, we'll highlight that when we write up this podcast. What's the most interesting strategy you see in the crypto hedge fund space?
It's interesting because it's a real diversity. Some are really long-term buy and hold, and others are more active traders. Some are super active. We've got some who are trading thousands of tokens a day or thousands of trades a day. Others that barely ever trade. some that try and look for the one key thing, others that are looking for really where is the super early next thing like memes were or AI was. We see a lot of that. So we see a lot of people looking for who's going to build the next big application on what area. So it's actually very broad spread. And that's the idea of having a diversified fund of funds is somebody's going to get it really right. Somebody will get it really wrong. And that shouldn't matter because you're diversified enough that what you should over time, if you select enough smart people, smart managers, they will generally perform very well. But it takes the risk of somebody, not getting the right strategy. Because look, nobody makes money all the time. And so that's okay too. You give people the opportunity to swing the bat once and not get it right. But others, we saw several managers last year doing 150% returns. It's very amazing.
And are any of these lending-based crypto coins that maybe just talk about equity returns in crypto and debt or lending-based returns? I've seen some triple and four-digit return expectations on some of these debts.
To be honest, Dave, there are some hedge funds that do that, and there's ways of rehypothecating capital and looping it around a system. It's very complicated, and it's extraordinarily risky. So it looks great to the average person. Hey, you can make 60%, 70%, 100%, whatever yields. But that yield is driven by risk. And that's really complicated. So we won't even invest in hedge funds that do those strategies, even if they're experts. Because there's so many component parts of those trades, and there's so many bits that could go wrong that the manager doesn't know, and we don't know, so we won't do it. Now, straightforward lending, borrowing, that's fine. But it's the really complicated, hey, I'm generating equity-like returns from lending. There's risk you don't understand. I don't want to take that risk with other people's money.
Yeah. Okay, that's really good to hear because I've seen personally two people who have been wiped out doing that. Getting caught up in one in particular, the gentleman's son sold his house and put the proceeds into these type of coins. And I warned him that this is not going to work out because as we all know, there's no such thing as a free lunch, even in this new space.
No, it's like, at this basic level, you and I might talk about, Bitcoin's at 140% returns. There's 80% drawdowns in that. Right? There is no such thing as a free lunch. You have to learn to hold a large drawdown in crypto to make the compounded returns. And as you say, with the credit markets, there is definitely no such thing as a free lunch. There never has been. And every time something is too good to be true in credit, it blows up.
For sure. Joe, I'm running a little bit low. There's lots and lots of questions, but I'm running low on macro here. Joe, do you have anything else you want to add?
No, I mean, I guess in our industry, and David, you kind of touched upon it, there's asset tokenization going on for firms like ours, right? Like servicing high net worth investors and that sort of thing. And it's a growth area for the firms, but also the investors. So I kind of like that dual, I believe in this. I think this is beyond the proof of concept, well beyond that. I kind of think that there was a little bit of excitement kind of leading into the U.S. election, and we'll kind of see how this year goes. But no,
one thing, Joe, is 4 years into the future, your product offerings will be tokenized. The Exponential Age Digital Asset Fund will be tokenized. Real Vision will be crowdsourcing capital formation and creating crowdsourced tokenized asset management. Right, this is where the world is going. So I always think, like, you're an asset manager, I'm an asset manager. The best thing to do is disrupt ourselves. You've got to invest in how you're going to be disrupted. And that's my belief in investing in AI and technology, which I know you guys do, and invest in crypto is you're investing in the threat to your own businesses or the ability to change your business even for the better. It's such a good way of doing it. It's better than saying, well, I don't want that to happen.
Yeah.
I mean, that doesn't help anybody. Saying you don't want it to happen doesn't mean it's not going to happen. It will happen, and you'll just be angry about it. But if you make money, you'll be delighted. If you run a wealth management business, if you can make a fortune out of crypto investing, you can retire, and then maybe you don't need to run a wealth management business. It's a big mindset shift once you realize the power of this asset class. It's extraordinary. It's hard. And I've seen many friends. I just had a friend who's a real estate developer in Phoenix, Arizona. He's been in that business a long time. He's very good. He's like, Raoul, I don't want to build houses anymore and sell them. I said, why? He goes, I don't need any staff. I don't need to do anything. I've got some capital. I just stick it in crypto and it generates me 100% plus returns a year over time. He said, I can't find a SaaS business, certainly not in real estate. He says, I've got to manage all the staff and the bank lending and all of this stuff. I don't have to do anything. That's an extraordinary admission. I see so many friends of mine go through this. It's like, if you've got enough capital, if you made a bit of capital in it, you're like, well, what's the point of starting a business?
Yeah. Now let's finish up with the new venture capital area that you're expanding into, and talk a little bit about that, because that's going to be new for our audience.
So if you think of blockchain as the foundational layer of the new internet, where value is transacted, stored, proven, right? That is what EDAF, the fund of hedge fund, does. That's the tokens, right? The tokens are just like a share of that of these networks. Like if we'd have tokenized the internet, that's really what we're doing here, right? We're tokenizing the new internet. So that's that trend from 3 trillion to 100 trillion. That's what the fund of hedge funds does. The next layer is all the applications that are going to get built on this. The applications are the borrowing business, the lending businesses, the tokenization of culture, the tokenization of real world assets, all of the things, gaming, all of the things that are going to get done, they're going to get done by venture capitalists funding it. And these are not liquid token businesses. Some come with tokens. So what we're doing is the same playbook. Is like, well, we've got the foundation layer, like the internet. Think of what happened after the internet was built. Google, Facebook, all of this was built on top. That's the capture here. And again, the best way to do it, find like 10, 12 of the best VCs in the world, early stage, who only focus on blockchain technology. And let's do it that way. It's just, again, we're just trying to keep it simple, stupid. We don't overcomplicate it. We don't have execution risk. We don't need to be the best performing hedge fund in the entire planet. We just need to capture this trend really well. And so I'm very excited about the launch of that product, which will be a little bit later, probably about mid-year. We'll launch that, and that should give us some great opportunities as well. So that's what I think. It's the internet layer, and then it's the business that got built on the internet. Both accrued massive amounts of value.
Yeah, it really should be acknowledged as something called digital venture capital rather than just VC, because VC is already out there. We all already invest in venture capital, but it has nothing to do with the digital side of the equation that you're talking about.
Now, what's interesting is because companies get a choice between equity and token, the velocity of capital formation is so fast that they can issue a token. The VC can de-risk their entire portfolio from a token issuance that they invested in 6 months prior. And then you've got the equity that has a longer duration. So it's a very attractive space because you get the twin benefits of equity plus token. So the returns can be extraordinary and the velocity of capital so much faster. So you can get money out really quick. And then you've still got the long tail of, hey, is this company going to build something really meaningful over an extended period of time?
Okay, well, that's really good. Anything that you want to finish up with, Raoul? Any other, what else is in the offering? Do you have anything else cooking on the back burner?
We will build out some other products over time, probably something in the growth VC side. So that's not very early stage, but mid stage, where companies have been de-risked. Returns aren't as high, but they're very interesting. And that suits a different type of investor. So we're looking at that as well. But really, we're just trying to focus on generating the best returns for our investors and capturing this big opportunity, because it's the biggest opportunity we've ever been given. You know, you guys have had some great ones in the past. I think Shopify was one of yours, stuff like that. Is, you know, it's the same idea. Is like, let's pick great secular trending themes and let's ride them and make some money.
This is great. Well, Joe's going to be writing it up shortly for our year-end commentary. So your XPAM, the cryptocurrency fund, will definitely be highlighted there. We'll have to be careful because we take care of retirees' money, and we don't want them to think we've jumped off the deep end here. We've done a very small initial investment with your group, and that will grow. But yeah, let's just keep communicating. Spoke to Pierre several times this morning, and you've got a really good partner and someone like that, and the other people you've surrounded yourselves with.
Thank you, I appreciate it. I mean, that's the thing. When people think, well, what do I allocate to this? It's pretty simple. If you're under the age of 40, do whatever you want, right? It's risky, you know that, but you've got time to make money back, so you can take the risk. If you're older, you really have to think, okay, I can see the opportunity, but what happens if something changes and we have a few bad years? And so what we've tended to find is that people start with something like a 5% allocation, maybe 2%. And what we've found is people over time get comfortable and they get larger. I mean, every single family office I've seen has gone from somebody trying to persuade the family office principal to do this and him saying no, to getting a 2% allocation. And then 3 years later, they're at 20%. But the thing is, dip your toe in, as other people say, get off zero, dip your toe in and see how it feels for you. One of the good things about a fund vehicle is you don't have to live with the volatility every day, which is really helpful, because if not, you get very distracted.
Great. Well, thank you, everyone, for hopefully tuning in to the end so you didn't miss out on anything. We'd be happy to share the deck for what we've done for you here with Raoul and his group. Keep on plugging with Real Vision. I think that's just such a great vehicle. And while you were talking about education, I thought, maybe they should have some kind of a university of crypto built within Real Vision.
We have.
Oh, you have such a thing. Okay, yeah. Good. I should really pay closer attention. And, that's excellent. So, Ken, maybe we can kill the recording and then we can just say another goodbye to Raoul.